In this video, we're going to be going over some trade setups, why I took them, some risk management, and how I could have improved on some of these trades. Let's get into the video. I'm filming this video on Friday, July 22nd, after market close. I'm just gonna be going over some trades I took this week. It was a pretty good trading week. The market pretty much went straight up. And I think I'm gonna try to start doing these, maybe once every 2 weeks. If you guys like this kind of format, me going over some real trades I took, just let me know in the comments below. But anyway, let's just jump straight into think or swim and start going with some trades I took. The first trade of the week was on Google, July 18th. So looking at the daily chart, if you watch my previous videos on key levels, it pretty much was a picture perfect trade almost on key levels. Google price opened up the day at like 112. And this is what I looked in the daily chart. So I had this key level going back to 111.27 and another key level going up to 113. If you look in the daily chart, the wick of the candle hit exactly here at 113.50. Now let's zoom in a bit further to the 5-minute time frame and see what I saw here. I got 4 Google contracts to 112 calls at 641, so they've been at this candle. And what do I see here? Well, first off, the Google price bounced perfectly at this key level. It's a big buying wick right here. Buyers are clearly in the market. If you look at volume, you had a pretty decent buying volume candle right here on the 5-minute. So that gave me a decent amount of confirmation to get in this trade. Take profit was going to be up here at 113. Now I did get out this trade a little bit early. Unfortunately, the contracts went up to like $3, I believe, but it was still a pretty well executed trade. I was pretty patient on the trade. I had a clear defined risk level off this key level below low of day. I got out probably 5 minutes before I actually hit this key level. This was the first day Google was trading under the split, so I just wasn't really sure how the price was gonna move. So I was a little bit quick to take profits, but I still ended up making about like $250 on this trade, which isn't bad. All right, so now we're looking at the option contracts for this trade. I took the $112 calls on Google for July 22nd expiration. And so on the right hand side of the screen, we're looking at the option contracts. So I took my initial position right here on this 1 minute, and by the way, these are 1 minute candles on the right hand side of the screen. I took 3 contracts to start my position at $1.95, so about $600 in this trade. My stop loss would have been below low of day, so I'm risking about 40 cents a contract. I have 3, so I'm risking about 120 on this trade so far. And then price kind of pulled back here on the 1 minute. We hit a low of $1.65. Never hit my stop loss. Never broke below this key level in the 5-minute. So I decided to actually add one more here at $1.75. My cost basis is roughly like $1.08, $1.90, something like that. So 4 contracts, I'm risking about like maybe 150, 160 on this trade. Contracts hit a high about 310, but I think I did a pretty good job scaling out this trade and taking profits as I should. So my first initial take profit is always 1-to-1 risk reward. So I'm risking 40 cents on the contract. My first take profit has to be 2-3 minimum. The contracts hit about 2-4, about 40 cents, 1-to-1 risk reward. I took off 2 contracts right here. So I locked in about like $80 so far. I started to pull back right here in this candle. I locked in another contract, so about 120. I had one more runner. Now if I would have waited for the price to hit this key level, it would have made me about like an extra like $50, but I just took one off. I took the final contract off here at 270. So the final profit on this trade was about 220. It was about a gain of 25%. I'm not really focused on huge gains. I'm really just more focused on dollar cost averaging my long-term portfolio. And I'm just trying to build this account up with consistency, make some money on the side while my long-term hopefully recovers in the future. Now moving on to the next trade. The next trade I took was on Apple. This was on Thursday, July 21st. And pretty similar setup to Google here. We had these key levels. It hit the key level 152.02. Bounced off it pretty much perfectly on the 5-minute. And what I was waiting for, well, I want to see Apple break over 153. So if you were in voice chat this day in Discord, I was pretty much saying I'm waiting for Apple to break 153. Finally broke over it. It was struggling at 153. You had like 20 minutes of consolidation under 153. Broke over it, came right back down, retested it, formed a bull flag above 153, and pretty much shot up to the next key level. My price target about 154. And one more thing I saw here on Apple, I was watching Bookmap at the time. If you're not familiar with this platform, I'm thinking about making a video on it. If you want to see that, just let me know. But on Bookmap, I was watching it. So we had that key level at 152. There's a huge order for it down here, about 45,000 lots. The price came down to 152, bounced off it. And if you look here on Bookmap, you can kind of see an inverse head and shoulders. Yeah, the shoulder, head, shoulder, the neckline would have been at 153. That's kind of what I was seeing. And I also want to see these orders at 153 get taken out. So you see when it initially broke down, it broke down through this big red wall right here and started selling off a bit more to 152. The seller re-added their position right here at 153. They got filled and price broke over 153. Tested VWAP, and those were pretty big signs for me to stay in this position and hold it to my key level, because I was getting kind of nervous on this position because like I said, I don't trade Apple that often. I don't really like how the contracts move, so it took a lot more patience than I would have liked out of this trade. Now looking back at the charts and Thinkorswim, so it broke over 153, bull flag, shot back up, and I formed another little bull flag right here. Let me just put on the 9 EMA so you guys can kind of see this. Kind of works with my video that I posted last week. So looking at the 9 EMA right here, get the bull flag in the 9 EMA, shot up. Slide bull flag in the 9 EMA, shot up. Hit the price target up here at 154, and this is where I started scaling out my position. So before I even think about taking profits, I need to see minimum about 75 cents on the ask. I had my limit order set here at 25 cents. Price finally broke over when there was a green candle. I took half off. So I locked in about 3 times 27, about like 90 on my first 3 contracts. And then price broke over the key level, our price target 154.73. Kind of chopped around up here. I took up one more contract at $1.10. Final contract about $1.20. If you look at this risk reward right here, the reward on the final contract was this much, and this is about how much we were risking. So this was this was roughly about like a 3-to-1 risk reward trade on the final contract. It was a pretty good risk reward ratio for me, and I really like this setup because you had defined risk, clear profit targets, and everything just kind of outlined. So it made a really good trade. I wasn't risking too much, and I bought home about like 220, 212 on this trade. Not too bad for profits, but like I said, I don't trade Apple that much, so it's kind of I don't really like how it moves, so I was a little bit nervous and antsy in this trade because it moves so slow. And the final trade we're looking at is Google, and this trade was on July 22nd, and I took the July 29th 114 calls. And there was something that I messed up here. Now during this time, on the top right we have the Nasdaq, the bottom right's the ES S&P 500. So in the first 5 minutes of the day, market opens about right here. Price just kind of shot up. We made new highs on the week about 12.7 on the Nasdaq, and we pretty much just got like an instant 100-point rejection. At the same time, ES had supply up here at about like 40.20, not respecting the supply zone right here. So I saw Nasdaq just broke over supply, so I figured the Google and all these other stocks would run. And I have to mention that Snapchat also affected Google and Meta. So Google and social media stocks were pretty weak on the day, which I didn't really factor in. I just figured the market was going to bounce here and break over supply. But this is why you need to be patient and follow price action, because clearly our Google did not follow and went straight down and slid pretty low on this day. So now let's just look at the option contracts. Saw price bouncing off this key level right here at 111. I figured it'll go up, and my stop loss will low of days. This is why it's critical to have a plan before each trade. If I didn't have a plan, I would have got destroyed in this trade and lost almost like 100% almost in one day, or about 50%. So I got in here about like 283. My stop loss was below lows. My stop loss was $1.90. Made my stop a little bit tighter, maybe like $2.05, $2, but I want to give myself more space because I was able to actively manage this trade at the time. So I gave myself a bit more wiggle room on this trade than I should have. That was my first mistake, or my second or third mistake, whichever. It was a few mistakes on this trade, regardless. So I was risking about like 90 cents per contract, which is a bit too much risk for me. I should have been risking, maybe like 40 cents, 30 cents. I did only take 2 contracts though, so I did compensate. I knew that I was taking wire risk on the trade, so I took fewer contracts. That's one critical way to manage risk. If you want to have a wire stop, just take less contracts. If you're going to take more contracts, have tighter risk, have a tighter stop. Pretty simple way to manage your risk. But I mean, if you look at the 1 day, or 5 day, 1 minute, I mean, these contracts had a pretty decent room to run. So I got in here at 283. If Google even tests like 113, the contracts will be up $1. And if they test, if Google got back up to 115, contracts would have been, roughly 4.6. So I did like the risk reward on this trade. If it worked out, it would have been like 2-to-1, 3-to-1. Probably hello runner, maybe make it like 3-to-1, 4-to-1 in the final trade. But it did not work out. I got stopped out here, down here at like $1.90. Thankfully I did. Price clearly slid down all day. If you took puts here, it was a great trade, clearly. But this is why it's pretty important to have a stop loss and take profit in the trade plan before entering each trade. If I didn't have a trade plan, I might have just held this trade all day and lost, like $400, $300 instead of just like $150. But those were the few mistakes I made in this trade. I just misread the market context, but I managed my risk pretty well. The other trades in the week made up for my loss on this Friday. It's kind of like a trading journal for me, and you guys can also like learn from my mistakes. and learn from my winners as well. I think it's like a mutual, way to help both of us. Anyway, just drop a like and comment. See you in the next video. Thanks for watching.